Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a nice and cloudy day here in sunny Tacoma, Washington, but that's part and parcel for February. Still a good day because we have Mark McGuire with us from Florida. I'm sure he has sun over there. Marvin McGuire. I apologize for that. Navy veteran, multifamily master. He has a lot of experience. I'm super excited to jump into this. Marvin, thank you very much for jumping on the show.
Yeah, glad to be here. Super glad to be here and provide some value to your listeners.
Yeah, absolutely. I told you before we got on here, we like to start with stories. I'm sure you got a good one. So take us to the beginning of your story. How'd you get started in real estate?
Yeah, for sure. Well, I spent about 25 years in the Navy, and over the course of my career, my wife and I collected either intentionally or unintentionally the whole unexpected landlord occurrence. Several, almost, I think at one point we had 6 single family homes, dotted around military bases around the United States. And what we found very, very rapidly as we transitioned out of the military and went into corporate America, that you have to replace a roof or an HVAC, or you have a leak or whatever, and then regardless of how well a lot of those assets are cash flowing, it sucks up a lot of your profits very, very rapidly. So we were looking in probably 22, looking for a way to kind of take that business and scale into something a little bit more efficient as far as our time was concerned. And we transitioned over to multifamily in a little over a year ago, and we're able to get involved in and purchase just about 500 multifamily doors in 23, and we're looking to do another close to 500 or more in 24. So we're super excited about it.
Damn, man, that is awesome. And that just goes to show that things can change very quickly once you put your mind to it. And you did it in 23, which was historically, it's been a bad time to buy properties. Just there isn't, the expectation between buyers and sellers is off. The interest rates are high. But you did it. You got it. 500 doors, 1 year. So congratulations on that. And that's a lesson for everybody out there. If you guys want to get into real estate and you feel like it's just a daunting task, it's going to take 20 years. It's not. Marvin did it in 1 year. So I love hearing those kind of stories.
Thank you. Yeah, it was a lot of work, but I think it's taking action and being consistent,
Yep.
and surrounding yourself with good people.
Yep, absolutely. So let's go back a little bit. You said you had 6 single family across the states. I want to go into your multifamily, but let's talk about just kind of your beginnings. So were these single family, they were stretched across literally different states, like 6 different states, or was some of them grouped? How was that worked out?
Some of them were grouped. We spent a significant amount of time in different areas. For example, we had 2 rental properties in Jacksonville, Florida. I spent 6 years up in Jacksonville earlier in my career. And, one of them was great, it was pretty, rinse and repeat, pretty push the button and collect the check. And the other one was the tenants left in the middle of the night and looked like they had been working on a motorcycle in the master bedroom. And, looked like maybe a teenage daughter had driven an SUV through the back end of the garage, and almost $15,000 later, we were able to repair it and get it back on the market. So it was, every deal is different, but those 2 were in the same city, as far as that's concerned.
Yeah, it only takes one kind of nightmare story in single family to realize like there's got to be a better way to do this.
Yeah, 100%. And we've had a couple. We've got 3 right now, single families in Tampa that are very, very close to each other that we still have. And recently we had a leak in the master bedroom of one of them that ended up being under the master bedroom in the slab. So you got to pull up all the flooring and take a jackhammer to the slab. Just crazy stuff.
Right. Yeah. And it's not, when you're talking 100-unit multifamily buildings, that kind of repair can be absorbed by the cash flow. But if you're talking about one door, that kind of repair is going to suck out the cash flow for,
Yes, sir.
X number of years. It's a big deal.
It is. It certainly is. And we feel like we've learned it the hard way, but we're on the right path now.
Yep. So yeah, let's talk about that. 500 doors 1 year. That is a great track record. It's fresh in your mind, so I'm sure you can go into the nitty gritty. And when we go into the details here, take the perspective of somebody listening who is excited about real estate. They're just getting into it, and they want to get to where you are in a year. So you made that decision 1 year ago to get into commercial, get into larger scale multifamily. What were the first few steps you took to get yourself down that path?
Perfect. Well, we have it's only been a year, so you're right. It's fresh in our mind. So whenever we, really started to think about making this pivot, we knew that, we understood the value of real estate. We understood kind of the basic mechanics, albeit not the intricacies of multifamily. So we knew that we had to get educated. So we joined a mastermind program to get educated.
Can you give that mastermind a shout out?
Sure. It's Rod Khleif's program, the Warrior Program with Rod Khleif. And
it's been on this podcast. Yeah.
Yeah. Rod is an amazing, authentic, genuine guy, and his program's amazing. So shout out to Rod Khleif. So we joined Rod's program this time last year, really. And that accomplished 2 or 3 different really key things. One, it helped us get educated. 2, it gave us a network that really, I think, helped us to accelerate our progress. And 3, it provided, that coaching, and that fallback to be able to reach out to folks that are, a year ahead of us, or 3 years or 5 years ahead of us. And so that really kind of put us on solid ground and accelerated us at the same time. So, fast forward 3 months, we invested as LPs in a deal just to kind of get that feeling of, okay, is this really going to work? People are out there getting started and they're like, hey, I know what's a limited partner and what's passive income and how do I really do this? And we wanted to have that feeling on, hey, does this stuff really work? And, if you're going to ask somebody for money, or if you're going to try to raise money, you want to have gone through the PPM and the subscription documents and hit send on that wire. And so we did that. And then it's, I knew.
Just pausing it real quick there.
Yeah.
So 1, what was the minimum investment in this deal? And then 2, how'd you find your GP?
Minimum investment was 50. Okay. And they usually a typical range is between 50 and 100, but this one was 50. And the way we found our GP was via that network. So, that program's probably 12 to 1,500 people now. And there's probably 400 or 500 people in that outfit that are really, really working the system hard. And so we started reaching out to, to operators and folks that are doing good deals. And that's how we got connected.
Nice. I love it. So you did a limited partner investment in somebody else's deal. From that point, I mean, that one hasn't gone full cycle because it's only been a year. So you're still invested there. How did you get into the next stage of investments?
Yeah. So the coaching program kind of helped me identify what I'm going to do best, and that's raise money. I retired from the military. I'm kind of a chatty guy from Texas and went into corporate IT sales after I retired. So immediately, it was like, hey, you're going to be a capital raiser. So after we kind of got our CRM and our network set up, to raise capital, we started reaching out to operators around that group as well, saying, hey, put me in, coach. I can raise money for your deal. Put me in. And, we got a lot of no's. Because, hey, you're just a newbie. You've only been here 6 months. You really don't know what you're doing. But finally got, a really gracious operator team that said, hey, I'll put you in. And we were able to raise $2 million for our first deal. And at that point, it really started the momentum really accelerated at that time.
Gotcha. Awesome. So you guys you're not GPs on the deal. You're capital raisers for GPs.
Or co-GPs on the deal. So we have a pretty decent percentage. I mean, we did due diligence. We put forth earnest money on the deal. We still do investor relations. and we raised capital for the deal. So we're co-GPs on those deals, and all the deals that other than the LP deal that we did last year.
Okay. For everybody listening, explain the different roles in a team when they're going to take down a larger commercial asset.
Certainly. So a GP team is usually usually ideally about 5 to 6. I've seen them as large as 8 partners, depending on the size of the deal, the larger deals. But typically, you've got somebody who has underwritten, who's in acquisitions, who's found the deal, is always talking to commercial brokers, who actually finds the deal. Then that same person may underwrite the deal and do the analysis, or they may pass it off to somebody who does a detailed market analysis and sub-market analysis and does the rent analysis and the financial, and really figures out whether it's a good financial deal that you could actually raise money for and attract investors. And then typically you've got a team that does due diligence, that'll, if you get the deal under contract, will go out and do the inspections and work with the contractors to inspect the plumbing and the electrical and the roofs and all of that. A lot of deals will still require something called a key personnel, which is a person who will sign on the loan and has the net worth and the liquidity necessary for these banks to make these multi-million-dollar loans. And then finally, you'll have usually about 30 to 35% of that, call it the general partner's share of a deal. That's 30 to 35% of that deal will be set aside for the folks that raise money for the deal. And that'll be, it'll be open to everybody, but there'll be hired guns that, hey, that's all they do. And that'll be set aside for them. And then you usually have about 30% set aside for the team that's going to asset manage the deal, that is going to manage that deal over the course of the 5 to 7 year business plan. And that asset management you can't stress how important it is, because that team that asset manages that asset over the course of 4, 5, 6, 7 years, they don't get paid. They do it. The general partners usually get their real payment at the end of the deal. So that's kind of how those roles and responsibilities are set up.
Yep. Yeah, and I like I like going through each individual role, because it shows people out there who want to step up, who have maybe a couple single families and they want to get into the commercial side of things. There's a lot of different things that you can do. And when you're, if you've started to buy single family properties, you've on a lower level, you've already gone through each of these steps on your own. So you kind of understand the gist of, you probably haven't raised capital, but you are the source of capital, or maybe like a friend, a family has gone in on the deal with you. You're asset managing the property because you're hiring the property manager, you're making sure they're doing their job, or you're managing the property yourself. So people, and you've underwritten it. Obviously, you looked at the property, you decided it was a good deal. So you already know what the different roles are. So if there was a specific role in that experience that you really liked, you enjoyed, that you orient yourself towards, that can be your niche, that can be your focus when you jump to the commercial side. If you're really good at underwriting, if you're really good at finding deals, if you're good at raising capital, those can be your, that can be your niche, that can be your strong suit that you bring to a team of 5, 6, 7 people who go out and take down deals. So that's awesome. And you're the capital raiser. So that's what we're going to talk about next. When you started raising capital, how did you go about finding high net worth individuals? And do you have a system in place that you've identified over the course of the last year that really helps you scale this?
Yeah, 100%. Great question. Yes to both. How I got kind of built out our database, call it CRM, your customer relationship management database, is I sent an email to everybody that in my Google. You can go to your Google or your Gmail and you hit A and the 2, and all the people with A come up, and B and all the people with B come up. I sent emails to those folks, and then I sent a text message to everybody kind of in my cell phone that I communicate with. And it was really non-threatening. It was just like, hey, friends and family, Victoria and I are starting on a new endeavor. We're going to launch a new small business focused on multifamily investing. If you're interested in following along in our journey, please send me your best email address. And if you're okay with me adding you to our database. And so just that alone, your family, your close friends, and a lot of your second and third level friends are going to sign up, whether it's they want to track your progress or they want to see how bad you kind of fall on your sword. So, and there are people in both camps. So that helped us, probably we have all got, several hundred people in our phone or our email account. So we were, that set us up with probably 125 people immediately that we could reach out to. And then we evaluated a number of different CRMs, HubSpot, Active Campaign. We kind of settled on Active Campaign.
Okay.
And then we built a 10 email drip campaign that kind of goes out to our investor pool that kind of, email one kind of introduces, hey, this is Marvin Victoria McGuire. Marv raises capital and Victoria is an exceptional underwriter. Here are our values. And then over the course of those next 9 emails, really 8 emails, it's, hey, why multifamily? How is multifamily different from single family? What are the tax benefits? What's passive income? What's forced appreciation? Really an educational, about 40 days worth of education. And then that last email is just, hey, what to expect from this point forward. And so once they get through that initial educational emails, they'll get 2 or 3 emails from us a month about, market updates, what we're working on, personal updates. And then, of course, if we have a deal alert and why we like the deal.
Nice. And I kind of want to stress how small your initial grouping is. People think that, you need thousands and thousands of contacts. You said 100 to 125 people. That was your first,
right. Yeah.
Your first CRM, your first batch of investors. You don't need a ton of people. It's amazing, especially if you're connected with people who are maybe, nearing their retirement. They've already built up their nest egg. So they do have money that they are looking to invest a lot of times in things that are not, not stock market related. People have been burned by the stock market. And so they're
100%.
looking for other assets to invest into. So yeah, that's awesome. So you're 1 year into it. You've been into 500 units so far. What does the next 2 to 3 years look like for you?
I think we can do 500 units this year and 500 units next. I mean, we really think that the second half of this year is going to be really, really good because we don't think that we're going to get any interest rate relief until probably June. So we think deals are going to start popping on the market, better deals, probably the latter half of this year, and then really heating up and being pretty consistent and sustained throughout 25. And the one thing is, there's tons of supply coming in around multifamily supply coming in around a lot of larger markets. So we think once we get through that kind of all these deliveries, there's not a whole lot of supply, post 25. And I think that'll help the market as well.
Nice. So 500 a year, that's your goal.
That's the goal. That's the goal. Now, whether we get there or not, that's the goal. It's always good to have a goal. I mean, but we're only going to bring, the very, very best deals to our investors. We're kind of conservative to a flaw. So if it's 100 this year and 600 next year, or if it's 300 and 300, we just like to have a goal.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
And is this with the same team that you're looking to do the 500 every, throughout the years, or do you have a number of GPs that you have vetted and you feel like they are ready, they have the experience that you're looking for, they're in the markets that you're looking for? Yeah, tell us about the team that you're going to be investing alongside.
We have three kind of partnership teams that we typically look to when we get a deal on the market. But something that's a little different, my wife Victoria and I are a little unique in that she really is an exceptionally talented underwriter. So we know what a deal really looks like immediately. So we're probably going to try to take down our own deal, this year and see what being a lead operator is versus being just a capital raiser. Obviously, there are different responsibilities, different levels of work, but they're also, different payouts as well. So we're going to investigate that this year and see which one we like better.
Right on, man. Well, good luck to that. It's always
Thank
it's
you.
fun to be on the asset management side. It can be a bit of a headache at times, but
Yeah.
it's a good ride. All right. Well, hey, that brings us to the end of our period here. It's time to jump into the quick question round. Are you ready?
Yeah. Awesome.
Let's do it. It starts with books or any form of education. Could be Netflix shows, could be YouTube channels, whatever. I just need two recommendations, one for general life wisdom and then one for real estate.
General life wisdom, I would say 2x is easier, 10x is easier than 2x as a book that really, really is applicable kind of across your life, which I found was awesome. And real estate, although this is going to be a little different because people aren't going to really go real estate. There's a book by Ryan Holiday called The Obstacle is the Key. The Obstacle is the Way.
Is the way, yeah.
Obstacle is the way. And it so hit me as applicable to real estate is because, hey, you have to attack your challenges. And I think it's really, if you read it from a real estate perspective, you'll immediately see the value.
Yeah. Yeah, I read that book a long time ago, and I really liked it. I should reread it because you're right. I feel like it is especially applicable to real estate because the hard deals are the ones that are going to have the greatest return. So if
100%.
you're willing to just look those difficulties in the face and tackle them head on, that's where you're really going to get the return that you're looking for. So good recommendation. Moving us on to the next question. This is for your younger self, your slightly younger self. Let's go back to the Marvin of a year ago who had not jumped into the commercial side yet. Go to him, look him in the eye, give him one piece of advice moving forward.
Don't be afraid. Don't be afraid.
Good advice.
Yeah, don't be afraid.
So if you go a little bit more into that when you were first starting, did you hesitate for a while or?
Oh my goodness. I mean, getting into a mastermind, a lot of them are expensive, and you go, oh my gosh,
25,000 plus.
Yeah. Yeah. I mean, and you go, hey, am I ever going to see this money again? Or is it going to be worth it? Or is it a scam? Or is it a ripoff? Whatever. And there are so many out there to choose from. And I would say, do your due diligence, get referrals, do all the things that you would do when you're buying a home. And then don't be afraid. If all that data checks out and the referrals are positive and you're really committed to working the system, and I, hammer the desk and stomp the feet. If you're really committed to working the system and following instructions and taking action, then go for it. Don't be afraid because we're living proof. It works.
Yeah, yeah. And it's so easy, especially when you're ready to sign those papers, ready to do whatever. It's easy to hesitate and just procrastinate and not want to do it. But you just got to push yourself through that wall. And you'll make it. And if people want recommendations for good masterminds, because I do feel like that's a good place to start. Rods is a great one. I've heard good recommendations for that, and then also Jake and Gino. A lot of people have been on here and have said that's also a great program. So reach out to them and don't be afraid. Just make the leap, get into it,
push through. Exactly, you hit it right on the head.
All right. Next question is. About the U.S. It's a big place, a lot of opportunity. Give me the single metro you're most excited about investing in today.
Greenville, South Carolina.
Okay, yeah. Greenville, South Carolina. Interesting. You're the first person to say that. So why Greenville?
Tons of people are moving to South Carolina because it is a very business-friendly state. It's part of what a lot of the business community calls the battery belt. A lot of these electrical vehicle, BMW, Hyundai, a lot of these large automotive companies are putting, I think BMW's got a $3.8 billion uh, automobile factory between Greenville, South Carolina, and Spartanburg, South Carolina. Hyundai just invested almost $4 billion just outside of Savannah, Georgia. So, we invest in Florida, Georgia, South Carolina, and Texas. And we found that both Georgia, Charleston, Savannah, upstate, Greenville, South Carolina are all just incredible places to invest.
Nice. Well, there we put one down for Greenville. Obviously everybody really likes the Southeast, South Carolina, Georgia, Florida, but that's the first time for Greenville. So love to hear that. All right, next question is about finding deals. I will open this one up and I'll say finding deals or GPs. So what is your favorite way to get in contact with new GPs or to find new deals?
Get on the phone. Nobody wants to make cold calls. Nobody wants to, a lot of people say, I'm working Crexi, I'm working LoopNet, or I'm on broker websites. And those are all, good ways to quote unquote find deals, but establishing relationships, regular relationships with brokers is absolutely incredible. So, I've got a list of about 30 brokers that I try to call every month. And a lot of those calls are just talking about Georgia football or recent current events or what'd you shoot on your last round of golf. But every once in a while those conversations leads to, oh man, I've got a deal here. Let me send it over to you. So get on the phone and make those calls.
Yep. It's so important to actually get in contact with people and have those conversations because most of the deals that go to market have already been picked over by tons of people that broker sent to before they put it on market. 100%. So if you want to get a good deal, you got to talk to the broker before he actually lists it. All right. Second to last question. This is about lessons learned. I know you haven't gone through a ton of deals yet, but I'm sure you have some good lessons in there. Not every deal that we go into goes the way we expect. But when, a wrench is thrown into the mix, that's when you learn the biggest lesson. So what was a deal that went a little sideways for you? And then what was the lesson you learned from it?
We bid on a deal just south, about 15 minutes south of Greenville, South Carolina in the fall. Submitted an LOI, got into best and final, missed on best and final by $100,000 on a $13 million deal. So just missed it. Deal fell through. It came back to us. We missed on it again by, I forget, less than that. And I started finding myself going, well, what if we did this and what if we did this to try to get that deal high, get our offer price higher. And in the end, I'm glad that, we didn't get the deal because we're here and it's not going well. And I guess the lesson learned is don't get emotional about the deal.
Yep.
Don't chase the deal. The numbers are the numbers are the numbers are the numbers. And so don't get emotional. Know what your offer price is. Know what the price is, that it still makes money and get great returns for your investors, and be willing to just, hey, draw that line. That's what it is. Yep. So,
yeah, it's so tempting to, once you've underwritten a deal and you've really put a lot of effort into it and you just want it to close.
Come on.
It's so tempting to imagine things about the underwriting that you can change, but don't. Just stick with your underwriting and make sure that you don't give in on that.
100%.
All right. Last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out. What's the best way for them to do that? And what can they expect when they do reach out?
Yeah. Our website is Hartzell, HEARTSILL, capitalpartners.com. My email is marv.mcguire at Hartzell Capital Partners. You can find us on LinkedIn, Facebook, reach out to me personally. And what folks can expect if they do reach out is, an authentic relationship with somebody who will shoot them straight. We'll be transparent. We're happy to share what we know to folks that are curious, like you're doing here, and try to do right by people. we're just regular people, just like your listeners and just like you, trying to make a better life for ourselves and for our kids, and want to help others do the same thing.
There you go. I'll put that link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description in there. You can find Marvin's link. All right, Marvin, that wraps it up. Thank you very much for hopping on the show.
Awesome. It was a lot of fun. I appreciate it, Gabe.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.